Welcome traders to another episode of Prophecy Trades. So, price just skipped over a whole zone like it never existed. Well, in today's video, that's definitely a fair value gap, and I'm going to share with you in under 5 minutes how to spot and trade a fair value gap and add it to your trading plan. So, let's dive into it. So, first things first, let's dive into AUD USD, and we are going to be on the hour time frame. So, a fair value gap, we need 3 candles at all times in order to identify this, and it's going to be the gap in the market. So you can see here, there's a tip of the wick here. Let me pull out my tools here for you so you can see exactly what I'm talking about here. So there's the tip of the wick here and the tip of the wick there. There's a gap in this candle. This gap needs to be filled. So that's why it's called a fair value gap. So what we're going to do is we're going to draw with our gray box from this tip of the wick to this tip of the wick and drag this box across into the future. So this would be the first step of identifying a fair value gap. The bias would be price would have to come back and retouch and respect this region before collapsing, because we're looking for shorts in the market, because previously market structure, we had higher highs and higher lows, higher highs, and then we had a market structure shift creating that first lower low. And this confirms that we're looking to short the markets. We're looking for short fair value gaps. The second thing I would do is I'm going to wait for price to print to come into this area, which it does, and we're going to drag this across. All right, then we're going to move on and we're going to pull our trend lines from this tip of the wick here, identifying in alignment with market structure. We're going to cross as many wicks as possible. As you can see, we have multiple touches, once, twice, 3 times, and eventually 4 and 5. Third, we're pulling out our fibs from this swing high to this swing low. Right about in this region here. Fourth, we're going to pull out our fibs again, and I call this the fib trick. It's the move within the move, completing of the retracement. So I'm bringing it from this swing low to this swing high, and we are going to then identify the completed move, which is that minus 27 and that minus 61.8 region. So as you can see, I'm going to highlight it in blue, and this is our completed zone. I'm going to delete the fibs of the fib trick for clarity, and now we have multiple confluences. Now for this example, we're just identifying a fair value gap, how to spot it and trade it. We would then drop down to the lower time frame for some type of candlestick analysis and price action. We do see price action here on the hour time frame, so I would draw my short position tool here, and I would then pull them anywhere from either this region or this region. So for the sake of the example, we had these tip of the wicks, price came down, collapsed, price comes back, is going to retest, and we have this price action candle here, and we would enter somewhere along those regions. Stopped would be just outside the fib trick in this case, or they would be outside the respective Fibonacci zone. So the Fibonacci respective zone would be the 78.6. So it would be the 88.6 would be our stop loss, giving us roughly a 17 pip stop loss. And then we would be targeting, our first initial target would be this minus 27. And then our second and final take profit would be that minus 61.8, giving us almost a 1 to 5 risk reward. So that's exactly how you spot, trade, and optimize a fair value gap in your trading plan. So, and then just diving down over to the future, we can see it again here. You see how price comes down and respects this fair value gap beautifully. And then price continues to rally to the upside. So that's a fair value gap. If you're liking these videos, press that like button and subscribe. Thank you.